All right, let's do it. Time to dive deep into cryptocurrency prices. I mean, trying to figure those out. It's like, whoa, predicting the weather in a hurricane.
Uh-huh. Yeah, that's a good way to put it.
But today, we're going to try to unpack this whole thing. Yeah, those big forces at play, the whole supply and demand thing, and see if we can't make a little more sense of it. What do you say?
Sounds like a plan. And trust me, when it comes to crypto, supply and demand, not as simple as they teach in, Econ 101.
Right, right, exactly. That's why we're here. But okay, let's start with some familiar ground, yeah. You know, our deep dive today, it's all anchored on your source material, and they kick things off with this super relatable thing of buying apples at the market. Like, everyone's done that, right?
Totally.
So they paint this picture, right? The price of apples, they drop by half. €1 a kilo, now it's only 50 cents.
Because who can resist a good deal? Seriously.
Yeah.
I know I can't.
And that's the thing, it kind of taps into this basic human thing, you know?
Yeah.
Seeing those prices drop triggers something.
Oh, for sure.
Almost like this, urge to just buy more, even if you weren't planning on it.
Totally. It's so true. I've totally been there at the store. Ooh, sale. It's like our brain just sees a giant deal sign flashing, and we got to have it. So, okay, how does this Apple frenzy, how does it all connect to, the cryptocurrency world? It's got to be more complex.
Well, on the surface, yeah, it's that same basic principle. Lower the price of a cryptocurrency, and in theory, you'd think more people would want to buy it, right?
Makes sense.
But, and this is a big but, crypto, it doesn't quite follow the same playbook as, your average grocery store. Right, right. And our source even warns about this, don't just assume that just because the price is down, it means it's a screaming BUY signal. So what else is going on in the minds of those crypto buyers? What really drives that demand if it's not just about ooh, cheap?
Good question. There are a few things at play here. First, you've got the whole sentiment thing. How is this particular cryptocurrency perceived? Do people see it as something innovative, disruptive, with real staying power? Or is it more surrounded by doubt, skepticism?
It's kind of like brand reputation, but for digital currency.
Exactly. A catchy name and a fancy website. Those can only get you so far.
Yeah.
Then you've got this other thing. I call it the future expectation factor. Basically, is there hype around this particular coin? Even if it's just hype, that buzz. People buy into it, they buy in hoping to ride the wave, right?
Right, because they're thinking it's only going to go up from here.
Exactly. Fueled by, the belief that other people will pile on too. And that'll push the price up even higher.
It's like a self-fulfilling prophecy, at least for a little bit.
Yeah, and the fear of missing out, FOMO, plays a huge role.
Oh, yeah, big time. Everyone wants to get in on the ground floor.
Right. And then you can't forget about market dynamics, especially something called market cap and what similar projects are priced at. So let's say you're interested in a popular blockchain platform, but it's native coin. It's crazy expensive.
Okay, yeah, I'm with you.
What you see happening a lot is investors, especially newer ones, they get drawn to similar, more affordable coins, often on smaller platforms, hoping it'll mirror the success of that pricier coin, Our source uses Ethereum as an example here. Ethereum, it's got a lot going for it, but those transaction fees can be a barrier.
So it's why pay more for the big name when you can get in on the ground floor with something similar?
Right.
Especially if you believe all that hype we talked about and you're thinking, this is going to be the next Ethereum.
Yeah, it's that classic thing, investors looking for that, hidden gem, before everyone else catches on.
Makes total sense. But okay, we've been talking about one side of the equation here, right? Why people want a particular cryptocurrency, that whole demand thing.
Right.
But now we got to flip the coin, right? Literally, and talk about supply.
Okay, and this is where things get really interesting. Because just like with our Apple analogy, supply in the crypto world, it's all about, well, how much of that cryptocurrency is actually available?
Okay, so if the price is high, more people want to sell, right? Our apple farmer, if those apples are flying off the shelves at a higher price, he's going to want to bring even more to market.
Exactly. That's basic economics, right? Supply and demand. But here's the catch with crypto. You ready for this?
Hit me.
Unlike those apples, you can't just whip up more Bitcoin overnight. Doesn't matter how high the price goes.
That's where that whole digital scarcity thing comes in, right?
Got it. And our source, they go into some really cool stuff about all the factors that influence the actual supply of a cryptocurrency.
Oh yeah, this is where it gets juicy. Let's hear it.
All right, so first up, you've got circulating supply. Think of this as how many of those digital apples are actually out there, ready to be bought and sold right now. It's not about the potential number of coins. It's like what's actually in circulation at this moment.
So even if a cryptocurrency could have like millions of coins eventually, it's the here and now that matters.
Exactly. And then on top of that, you've got all these other things that affect that circulating supply. Like how easy or difficult is it to even create more of this cryptocurrency?
Oh, right. That's the whole mining thing, isn't it?
Exactly. Some cryptocurrencies, like Bitcoin's a perfect example, they have a limited supply, like hard-coded into them. Only 21 million Bitcoins will ever exist. That's it.
Wow.
That scarcity, it's built in, and it's a big reason why Bitcoin is so valuable. But then you've got others that might have a much slower, more controlled, like, mining rate, meaning new coins are trickling out there gradually.
Interesting. So it's like comparing a small orchard with like a set number of trees that can only produce so much fruit versus a huge orchard where you can keep planting new trees, right?
Perfect analogy. But it gets even wilder. Then we've got this crazy thing called token burning.
Token burning. Okay, now I'm lost. What's that all about?
So imagine if our apple farmer,
Right.
he decides to just burn a bunch of his apples.
Burn them. Like, set them on fire. Why would he ever do that?
Sounds crazy, right? But the logic is, by destroying some of the existing supply, what's left is more scarce and potentially more valuable.
Okay, so in the crypto world, they actually do this. Just delete coins to make the rest worth more.
Well, that is a delete, but yeah, it's called token burning. Some projects, they'll intentionally burn tokens. Basically, they take them out of circulation permanently.
Wild. So it's like they're sacrificing a piece of the pie to make the remaining slices like more desirable or something?
Exactly. And it can really work,
Right.
especially if they burn a significant chunk of those tokens.
Wow. Okay. I'm starting to see how this is all way more complex than just like glancing at a price chart.
Right. And we're not even done yet. We haven't even touched on the cost of mining these things
Yeah.
because it's not free to create these digital coins.
Yeah, our apple farmers got to pay for fertilizer and stuff, right?
Exactly. Mining cryptocurrency takes serious resources. We're talking massive computing power, tons of electricity just to run the whole operation.
So it's not just about knowing how to mine, it's about having the hardware and the energy to actually do it.
Yep. And those costs, they can go up and down like crazy. The price of electricity, finding specialized computer chips, it all adds up. So if the cost to mine those coins is more than the profit a miner makes from selling them,
It's not worth it.
exactly, they might scale back, mine less, which then, of course, affects the supply that's out there.
Right, so they've got to stay on top of all that too.
Absolutely. And then, of course, you can't forget about the government.
Oh, right. The government always has a say, don't they?
Always. Just like our apple farmers got rules and regulations and taxes, the crypto world, it's got to deal with governments all over the place. And that has a huge GE impact on supply.
Because if a government is like pro-crypto, that's going to make things easier for miners and stuff.
Exactly. Tax breaks, clear regulations, all that makes it more attractive to do business. But then you've got the flip side.
Where governments are like, nope, not into crypto.
Exactly. Strict regulations, even outright bans. We saw that in China, right? And that could really throw things for a loop.
Yeah, if people can't mine it or trade it easily, that's got to mess with the supply.
Big time. And last but not least, we can't forget about our old friend, future expectations, but this time from the perspective of the miners.
Oh, interesting. So they're playing the market too.
Oh yeah. If miners think the price of a coin is about to skyrocket,
They're going to hold on tight to what they've got, right?
you got it. Wait for the perfect moment to sell, maximize those profits, and that holding back, that reluctance to sell, that can shrink the supply even more, even if more coins technically exist.
It's like this whole other level of strategy.
It is. In all these things, it's constantly changing, evolving.
Wow, my head's spinning. We started with apples at the market, and now I'm like, whoa, there's so much more to these crypto prices than meets the eye.
Right. It's easy to get caught up in those like price charts, all the ups and downs, but we've seen how much is going on underneath, you know.
Yeah, for sure. Our source keeps saying how important it is to have this complete and informed view, and I'm starting to get it. It's more than just like reading a headline or two.
Way more. You got to connect the dots because a single news story, I mean, it could be anything, new regulation somewhere, some tech breakthrough, even just like how people are feeling about crypto that day.
It all has this ripple effect, right?
Totally. And it can hit both demand and supply in ways you wouldn't expect.
So, okay, big question time. How can our listeners actually use all this? Like, what should they be thinking about when they're looking at the crypto market? Give us that one takeaway.
Okay, here's a challenge. Next time you see a big crypto news story, anything that catches your eye, I want you to stop and think, how could this affect the value of a specific cryptocurrency? And just as important, how's it going to make those miners, developers, big investors, how's it going to make them act?
Oh, interesting.
Right. Are they going to hold on tight to their coins, thinking the price is going to go up? Or are they going to be like, get me out, sell, sell, sell?
It's like you got to get inside their heads.
Exactly. That's what it takes to really understand this whole game.
Man, this has been wild. We've gone from apples and oranges to like digital black holes and government crackdown. I feel like I'm speaking a whole new language now.
Right. But that's what makes it so interesting. It's always changing, always something new.
Yeah.
But if you get those basic principles, the forces at play, then you're in a much better spot to make sense of it all.
Totally. All right, listeners, stay curious out there, keep those brains engaged, and remember, knowledge is power. Until next time on The Deep Dive, happy exploring.